Jonathan, I want to talk about this notion of accredited investors. I have always thought the definition was, I don't know, faulty. I've also realized that it hasn't changed in 20 years and we've had just a little bit of inflation. Historically speaking, my understanding of accredited investor was you have a net worth of $1 million, excluding primary residence, or I think you made more than 250 grand last year and had
200,
recent
200,000. Yeah.
200,000, and you have expectations of doing that again the current year if you're single. I never understood that, right? I live in the Silicon Valley. You know, every software engineer, or not every, most software engineers, most sales guys make that, and most of them are not sophisticated investors. So I think there's some stuff going on in Congress about changing the definition. Maybe we can talk about that. Maybe even talk about what we would like it to see, because accredited investor is important, right? You get access to different deal flow, right? If you ever played the Rich Dad Poor Dad game Cash Flow, accredited investors is the outside track. The inside track is, you know, the 40-hour, 40-year life, or 40-hour, 40-year life. So what do you think accredited investor definition? Do you see it changing? What should it be? All that stuff.
Yeah, I mean, well, so it looks like it's going to change, but let me sort of delve into the background of this a little bit. Right. So the history of this accredited investor idea really goes back to where, to the original regulation of the securities industry back in the 1930s, right? When it went from the complete Wild West, where people were selling securities for companies that didn't exist and all kinds of stuff, and the federal government got involved and regulated the securities industry basically around disclosure. I mean, there's not substance that you have to do, but you have to disclose everything. They so basically said, you have to do an IPO, you have to register your securities, blah, blah, blah. But there was a recognition that, there are deals that fall into the definition of securities, but they're small deals. You don't want to make people have to go to Wall Street to list these securities on a public exchange. We have to carve out some exception for those. So you have private placements or private offerings, but then, well, who can take part in that? Well, because this is not regulated and they don't have the disclosures that are required of public filings, we don't want fraud to occur. So we want to limit this to people who have the sophistication to understand what these investments are all about. So they came up with this accredited investor idea. And to make it very simple, it was defined as, well, if you're really rich, you probably know something about money. Right?
Yeah, really rich or make a lot of money, you know stuff about money, which both are true.
Or you can afford the loss. Right?
Yeah, you can afford the loss. Yeah,
you can afford to lose the money. Right. So this definition developed and it changed over the years, but the most recent iteration of it was that if you had $1 million of net worth, excluding your primary residence, or you make $200,000 a year or $300,000 as a couple, you were deemed to be, able to lose the money and sophisticated enough to invest. There was also this definition of a quote unquote sophisticated investor, concept of a sophisticated investor who was also allowed to participate. And there was somebody who didn't meet those financial requirements, but could demonstrate their sophistication, except that was never defined what that meant, right? So people have sort of had to wing it on, well, what is a sophisticated investor? I personally have just never dealt with sophisticated investors because I didn't want to try to guess what that was. Yeah. And as you said, there are enough accredited investors now because everybody in Silicon Valley, I mean, in my old industry, like every first year associate in a law firm is now accredited, right? So it's a definition that got expanded so much because they they just never increased the amounts anymore. But at the same time, it didn't really deal with people who don't make that amount of money, or maybe most of their net worth is tied up in their house, which it always seemed kind of ridiculous to me that if you have no debt on your house and your house is worth $1 million, you're not accredited. But if you went and took a big home mortgage loan and put the cash in the bank, then suddenly you're accredited the next day, right? Which makes no sense to me. But they've now got a bill going through Congress, which is going to change the definition of accredited investor. And I think the reason that this is happening is because about 3 years ago, the SEC made this big like splash. We're going to redefine accredited investors and expand this category to make it available to more people. And after all this fanfare, all that happened was they expanded the definition so that if you have your securities license, like your Series 7 or Series 63, then you're accredited. That was the only thing they did. And it was like really, it was this big,
really
like
silly
letdown, right? And
I do think one thing is interesting is they haven't changed it in 20 years. So what I just did on my phone is I said, if you had if you had $1 million today, what was it 20 years ago?
Yeah.
Or what would it be, right? And the answer is 1.7. So if you had $1 million in 2000, it would be like having 1.7 today.
Right.
Just that example shows you how out of touch,
the definition is. So so I did just very briefly, I didn't have a chance to dig into this very, very deeply, but so I looked at one of the bills that's going through Congress, and this will all, get the sausage will get all mixed up as this goes through. But one thing that's going to happen or is proposed is that they start indexing the dollar amounts to inflation. So rather than which just makes it really easy, it's very straightforward. Rather than having to come back every 10 years and revise the definition, they just say we're indexing to inflation and that's it. So every year the SEC will then publish like, well, this is what you need to be considered accredited. And so that will make it easy, but it'll also start excluding people, right, whose incomes or net worth don't keep up with inflation. What they're also doing, apparently, and I haven't dug into this enough, but they are going to apparently make a test for people to take to show that they're sophisticated enough, but they're going to call them accredited to engage in these investments, which I think is, potentially can really expand the number of people who are considered accredited, because, you could be someone like my grandmother who is very sophisticated in terms of investing, but would never have met the definition of accredited investor, right? So someone like that could take a test and prove that they know how these investments work. So that's potentially interesting. Now, of course, what's the test going to look like? Who's going to devise it? There's all kinds of the devil's in the details, but I think that this could really expand the number of people who are able to get into these investments.
I think there's a couple of things. And again, watching Congress do its thing is frustrating probably on any issue. But I think there's really two things that need to happen here. One is easy. You got to index this thing by inflation. That's insulting that wasn't done. But second, kind of at removing the gray area for sophisticated is, I think it's worthwhile, right? Again, if you getting access to deals again on the cash flow game outside the just normal is interesting, but you've got to protect yourselves, right? You got to protect the public somehow. So it'll be very interesting to see what's in the test. Is it something you have to retake? Is it, all of those things. So again, I think, and then if you're an operator looking to raise funds, obviously a larger pool is interesting.
Yeah.
I like that you stay out of the gray areas until it's the definition, right? Because I could see you going, okay, if here's your test, you got a 91, I'll talk to you. Oh, you got a 68, can't talk to you. I think those are all interesting.
Yeah. And I'm sure that there's going to be some kind of business development. So right now there are these accreditation firms, right? That'll where you can go and prove that you're accredited. I'm sure that you'll have the same thing now, and probably some of the same firms will have the tests based on whatever, the SEC says the test has to contain. There are a few things that I would like to see when you talk about what would I want to see, them change if possible. For one thing, I think that there are certain professions that should just by default be accredited. Like if you're a CPA, you should be accredited, right? I mean, that seems kind of ridiculous to me that if you're a CPA, you're not considered sophisticated when it comes to money. So that's one thing. I think, you're supposed to reaccredit yourself like every 6 months or whatever it is if you're participating in deals. That also seems sort of silly to me. Like if you got into deals, and let's say that you've invested in 5 syndications, right? And now for whatever reason, like the stock market goes down, so your stock portfolio is worth less, or your real estate investments are worth less now, right? Now you're suddenly not sophisticated enough to invest in your 6th syndication. That seems silly to me. So like history and track record should be something that gets you accredited status, right? And or once you have it, you shouldn't lose it, like simply because you, like your circumstances changed or you retired. Like you retire, you worked 40 years, you learned a lot about investing, you invested in a bunch of deals, now you retire and your income is less and you're not accredited anymore. And like, that doesn't make any sense to me. So, another thing would be like, are you in the business of being a syndicator, right? Are you a
Yeah.
syndicator? Like you should be accredited. Like clearly, you know how these deals work, right? So things like that, I think would make a big difference. And I
Yeah.
would like to see reforms like that. I don't know what's in the legislation, but something like that I think would make a lot of
Yeah.
sense.
Well, folks, do us a favor. We'd love to hear from you. Leave comments below. What would you like to see changed in the accreditation? Do you even want to be accredited? Maybe you're of the type that says, no, it shouldn't exist. Let us know below. I'd love to hear from you. Jonathan, where can people find you?
Yeah, please come and check out my Facebook group, Apartment Investors Club. We always have a conversation there about multifamily investing. And you can come and check out my podcast, Apartment Investors Club, or go to my website, apartmentinvestorsclub.com, and grab my free download and get on my email list.
Awesome, Jonathan. Thanks so much. Take care.
Absolutely.